Hello and welcome to BloombergQuint. The first advanced estimates for FY21 GDP are in. They will inform the upcoming budget, and the numbers are important in that context. What do the numbers say? They expect the economy to contract by 7.7%. On a real GDP basis. That's not particularly out of line with the 7.5% contraction the RBI had forecast. On a nominal basis, the estimate is for a 4.2% decline in FY21. Joining us to talk about the numbers and what we should focus on, Rahul Bajoria, Chief India Economist at Barclays, and Kaushik Das, Chief India Economist at Deutsche Bank. Thank you both so much for taking the time to speak with us. Rahul, let me come to you first. The headline numbers don't seem like they have any surprises built in, do they?
Yeah, I mean, it's basically in line with what the RBI is forecasting, which is minus 7.5. I mean, they're slightly below the RBI estimate. We still think there's room for some positive surprise. I think in the last 3 or 4 months, we have seen the economy consistently surprise on the upside as far as the pace of recovery is concerned. And I think if we do have a relatively smooth vaccine rollout, we will probably see the further unlocking of the last mile sectors, and particularly in the service sector, where we have seen a very consistent upward momentum in activity. So we are still slightly more optimistic than these first estimates. We are at minus 6.5% contraction for the current fiscal year. So we think there will be probably a little bit more upward revision as time passes.
Yes, and you could be absolutely right, given what we've seen on the ground, Kaushik. In line with your estimates, though, just for the sake of our viewers, these estimates essentially build in the first 2 quarters of real numbers. So what we may have seen in terms of pickup in high frequency numbers in, say, November and December, those would not have been built into these advanced estimates. Am I right, Kaushik?
Yeah, I mean, this is just about guessing how the, kind of growth will pan out over the year. I mean, obviously, there would be many more revisions to these numbers. It can be both on the higher side or, on the downside. We have seen in the past years, normally advanced estimates have been revised downward in the previous years, but this time it could be different. You could actually get an upward surprise, like Rahul mentioned. We had a minus 7.6%, so more or less this is in line, which factors in almost a balanced growth in October, December, or slight negative. We have a slight negative number, which could be once we get all the numbers, probably October, December, we could take a better guess. And January, March, we always were a bit more positive. So we have a 2.5% positive growth for January, March. So, taken together, I think 7.6, 7.7, or even RBI 7.5 minus looks much more realistic. What is more important, though, for the budget exercise is the nominal GDP growth. And this is what will be used now to calculate all the fiscal ratios. So they have given minus 4.2, and this is also realistic. We have a number of minus 4.3, and the reason is that the GDP deflator has been lower than the CPI because of WPI inflation being lower. So at this stage, these numbers look very credible, and as we move forward, we are sure we'll get many more revisions. So 28th February, we'll get the October-December GDP number, and you probably could see numbers being adjusted based on the actual numbers that you get in October-December.
Okay, I'll get to the budget part in a bit, but Rahul, can you help us through sort of the takeaways from the sectoral side? I think, construction, but more than that, actually, I'm sorry, trade, hotels, transport is the worst hit, as you would expect it to be. Construction and mining also fairly sort of badly hit this year. Agriculture has been a support, but obviously it can't pull up the big headline numbers up.
Yeah, I mean, so along the lines of, what the numbers are showing, I think when you compare the half-yearly results, which we already have through the quarterly estimates, I think there might be a little bit of conservatism around the growth assumption on agriculture, which has continued to maintain a reasonably strong momentum. I think where the numbers might be a slightly more optimistic on the sectoral side is in the construction activity. They are projecting a very strong rebound in the second half. Along with that, some of the service sectors are also probably showing a bit too strong a rebound, given that some of the contact areas are still under some kind of restrictions in various parts of the country. But overall, I think, there is probably some scope for manufacturing and some of the tangible, tradable side of the economy to show some upward momentum more than what the projected numbers are. More interestingly, I think on the expenditure side, clearly they are penciling in a sharp decline in investment activity. There also, I think, hopefully we will see some revival in the second part of the fiscal year. But I think broadly speaking, there is no significant divergences that you would see in the sectoral data.
Kaushik, I haven't done the numbers, sorry, but so what does it work out to in terms of industry services breakup? And also, that I think in one of the quarterly numbers, there was a little bit of divergence on the public administration side vis-a-vis the expenditure numbers. They are expecting a contraction of 3.7% in the latest number, which is what we have seen in terms of overall expenditure trends as well, right?
So the thing is, I haven't done the numbers in details.
Okay,
and
sorry.
No, and the thing is, they give it in such a way that services, normally construction is taken within services. So you have to adjust it.
Yeah.
I saw in the flash that they showed manufacturing, they're expecting to contract by minus 9.4%.
Yeah.
Right?
Yeah.
I think that's a bit too negative. Our industrial sector forecast is about minus 7% contraction.
Okay.
Whereas the services sector, we are more negative, minus 9.5%. Now, adjusting for construction, we need to see, how these numbers look. But as I told you, like after a few months, these numbers will not be relevant anymore with all the revisions that will come in. And, you have this element of discrepancy, which I've discussed with you before. And discrepancy is an element which you cannot adjust. I mean, you later adjust it with the different C plus I plus G. So once you do all that, the numbers can look very different, and we can have a separate conversation about the revised numbers. But as of now, to work with these numbers for the budget, I think, everybody will think these numbers as credible, and we can work with these numbers for the time being.
Okay. Rahul, in the first 2 quarters, we were a little surprised by the sluggishness in government spending, but with an overall full year projection of, I think, about 5.8% increase in government final consumption expenditure, that you think already builds in what we saw both in October, but most importantly in November, where almost, I think, a 47-48% increase in government expenditure.
Yeah, absolutely. I think the numbers look relatively credible because I think a lot of the spending that has happened this year has basically been through transfer payments. And so, the first half spending, particularly the collapse we saw in the second quarter numbers for the fiscal year, were probably a reflection of these transfer payments getting factored into the spending part. So they were not really counted as consumption, right? I mean, they were basically part of the private consumption numbers. I think in the second half of the year, we will see some normalization in spending patterns on the government side. So you probably do end up with a slight positive growth. Now, this could very well, end up being closer to 0 or maybe plus 2%. It's hard to say exactly because it also depends on how the cash accounting side works, right? If the government chooses to front load a lot of spending on the books, then it will show up as expenditure. If they push it out to next year, it might not show up this year, but may show up next year. So there will be some accounting impact. But I think broadly speaking, a 5% growth in public consumption sounds about right.
Ira, if I may come in, I mean, I was just looking at our own forecast. So government consumption expenditure growth, we have about 4.3%. Around those, level, and we have investment about minus 15%, and we have private consumption at minus 9%. So total consumption works out to minus 7%. So these numbers, if you got the headline correct of minus 7.6 or thereabouts, these numbers will not be that different because everybody is trying to extrapolate based on what we've got in the first half. Yeah. So these numbers look okay for the time being, even sector wise.
Okay, got it. On to the sort of main question about what these numbers mean for the budget. So Kaushik, staying with you, I think there's the widest range I have seen on fiscal deficit estimates, predictably. So there's 6.5 on one side and there's 8 on the other side. You're nearer to 8, I think. Do these numbers help us, settle that debate at all or no?
No, Ira, remember that when the budget would be presented on 1st February, they're going to present the revised estimates.
Yeah.
Now, we have seen in the past, the actual numbers for FY21 fiscal has been different from the revised estimates because even the government would have proper data till November and maybe some data till December, which we don't have. And based on that, they're forecasting for January to March and, they're basing their expectations. For example, how much disinvestments they plan to do by March. Now, they'll have a better idea and sometimes they are more optimistic in their expectations. So it's a question of what would they like to put and how will they then manage the expenditure and revenue. Revenue, you can't do much except for disinvestment if you can do it faster. But the other things will take its own whatever direction. But expenditure you can control. But as Rahul mentioned and you also mentioned that we have seen that in November, government expenditure has grown by 48% YOY, and October was 9.5% YOY in nominal terms. And July, September, it was minus 13.5%. So the government has actually started spending from October onwards, and November was a big increase. So looking at this trend, I would assume that December to March, government would want to spend more to support growth. And therefore, they would not want to, focus on reducing the fiscal deficit too much this year, like they used to do in the previous years that, January to March, they used to cut down on expenditure. This time it can be opposite, and they could spend more. And therefore, you could end up with 7.78% kind of fiscal deficit target, revised estimate for this year. And then next year, you try to achieve a better number based on, the things that you could not do this year, like disinvestments will get pushed into next year, LIC IPO, maybe some 5G spectrum auction could be factored in next year. So the next year number could look better than, this year.
Rahul, it's going to be very foggy, right? I mean, you're projecting, and even for the government to actually make their estimates for FY22, while this number will certainly inform their judgment of what FY22 nominal GDP will be. But it could, there's so many variables up in the air. Does the virus come back? Does the vaccination happen quicker than expected? Does that, lead to another boost in activity? So not just FY21 RE on the fiscal side, FY22 BE is also in some way sort of throwing darts, no?
Yeah, absolutely. I think in the current environment, I would agree with what Kaushik was saying, that, a 7.5% kind of a fiscal deficit looks pretty much par for course for the current fiscal. I think for next fiscal, a couple of assumptions that we can reasonably make is that, one, the nominal buoyancy in the economy is likely to stay with us, even if there is a resurgence of cases. Hard lockdowns are probably out of question. So the economic hit that you actually see, what we saw in previous episodes is unlikely to be repeated, right? So from that standpoint, the revenue buoyancy in the system is likely to be good. So the government's ability to spend, or, a means to spend, are likely to remain relatively good as well. So I think they can plan for a little bit more expenditure, probably discretionary expenditure in the system. There will probably also be a bit of caution around, the government maybe ring fencing certain amount of money, just in case if they need to spend it for healthcare reasons, or, as part of the vaccine program. It will be there. I think they will plan for it, and maybe that can get utilized if we do not see a resurgence. That money will probably be used as a way to spend into the recovery cycle. But certainly as part of any, from the revenue buoyancy we see, we don't think there will be any organic ability of the government to really try to consolidate a fiscal deficit in a significant manner on level terms. Whatever consolidation happens probably happens because the base of the economy is going to widen again.
Yeah, so that's, Kaushik, if you can just pick up from there, and just for the sake of our viewers. So look, there will be a fiscal deficit number, which, everybody will focus on. And that will certainly show a decline compared to FY21, whatever the RE ends up at being. But that may or may not reflect a tightening fiscal stance, right? I mean, a lot of that may be just revenue pickup plus the GDP base changing. So it would be the expenditure numbers as a percentage of GDP that one would need to focus on. And those you think will be at least at par with what we've seen in FY21?
Yeah, I think you hit the nail on the head, in the sense that never in the budget you should look at percentage YOY growth, even in normal times, because that's a function of many different things. The base could be small, and then suddenly you see like 50% growth in one item. That is not something which you should focus on. You should always focus on percentage of GDP. So if the GDP is growing, 12-13% nominal terms, then obviously your tax, direct tax expectation would be also in terms of 14-15%. But that is not something which you should focus on. You should see percentage of GDP. What was the trend before, pre-pandemic, and during pre-pandemic, during pandemic, obviously it must have collapsed. And then are you going back to the percentage of GDP in the pre-pandemic period? That will give you an idea. Second is, you can put any fiscal deficit number for next year. Point is, should you be consolidating at a very fast pace next year? Which means that the level of expenditure, if you are consolidating, has to come down quite significant. Is that the right thing to do? Is this growth that we are seeing, will it get, supported if you don't have, that much support from the fiscal side or monetary policy side? So in some sense, you could argue that, probably keeping a little higher fiscal deficit next year, but, focusing more on the quality of the expenditure so that you could create productive assets. That will help growth. So if you put 6.5% next year, it will not be a bad thing as far as growth is coming, back, because ultimately the debt GDP is, a ratio. And if the GDP increases, then the debt GDP also will look better compared to this year. So it's about whether you want to reduce debt very quickly in 1 year, or you want to increase the denominator, and so that debt GDP kind of stabilizes. So we have an expectation of 6.5% for next year. Now, can they put 5.5%? It's easy. I mean, if you put a very high disinvestment target again next year, saying that LIC IPO did not happen, so it will happen next year, plus we are planning all these things which did not happen this year, you can again throw a 2-3 trillion disinvestment target, and you can reduce the fiscal deficit number per se. But then once you get all these numbers and you do a percentage of GDP, that will kind of give you an idea whether you are having a fiscal contraction or you are at least maintaining the same level.
Rahul, last question to you then. What would you want to see in terms of the stance in the budget on the fiscal side? And also, I guess somewhere at the back of the mind, they have to be mindful of the fact that the extraordinary conditions which allowed a very large borrowing program to go through smoothly may or may not exist next year.
Yeah, so I think in terms of the spending capacity of the government, clearly it is going to be increasing mainly because of the revenue buoyancy, which is going to come back in the system. I think the first thing, as Kaushik rightly said, is that you don't want to constrain the economy by taking a negative fiscal impulse in this budget. It's probably more sensible to plan for larger spending, or at least adequate amount of spending, and then sort of if the economy does pick up a lot more, then probably surprise positively on the upside as far as fiscal consolidation is concerned, because the economy will be recovering on its own if the stimulus package works. In this particular environment, I think given the spending commitments which are already there, there's actually not a lot of wiggle room the government enjoys as far as discretionary spending on capex and things like that are concerned. So I think creating the right kind of environment, atmosphere for capital raising, either by government companies or by private sector, pursuing financial sector reforms is probably the best thing they can do, is to basically provide a platform from which both public and private sector companies can take off and add into the recovery cycle. So basically provide a catalyst more than necessarily only providing spending.
Ira, if I may add one point, on one hand we are saying that it is not probably advisable to reduce the fiscal deficit too much, but at the same time what you'd like to see in the budget is a roadmap beyond FY22, showing that at what level you would want to bring down the deficit and the debt, and that would give some comfort to the long-term fixed income investors who are looking to invest in India. So you can balance both, saying that this is the need of the hour to keep the deficit a bit high even next year, but beyond that we are planning over the next 5-year period to bring it to such and such level and the debt GDP to such and such level. So if you mix it this way, I think the budget would be seen very positively.
And the ever-standing dream of a fiscal council.
Yep. Maybe someday it will come.
All right. I'll leave it at that for now. Kaushik, Rahul, always great to get your thoughts and your analysis on data. Appreciate your time here on BloombergQuint. Thanks for watching BloombergQuint. Do go to the website. We'll have the views all up there, including the data. Thanks.